You are watching Market Wrap, Keith Springer's critical economic and market update video series.
By far, the biggest question I've gotten the last week is what's going on with Greece and can it bring our markets down? Very good questions and very scary times. See, Greece right now is going through an area and a period where it's being imploded by tremendous debt. Basically, the years and years of earning a nickel and spending a dime is now coming to pay the piper. Sound familiar to our situation? And it's not so much that Greece is the problem, it's a contagion or a domino effect. If Greece has a problem and fails, other countries similar to Greece might do the same thing. The next country in line would be Portugal, then maybe Italy, and then even the UK. And because all these countries and banks are intertwined and investing in each other, it could implode the system. Very similar to our financial crisis a couple of years ago. We had a banking crisis, which was first seen with Bear Stearns. Bear Stearns crumbled. At that point, they came in and they rescued Bear Stearns. Then you saw Citibank. Then you saw Wachovia. And by the time they got to Lehman Brothers, there was nothing left. So that's been the major concern for Greece. Not that it's a direct effect because of Greece, but because of what it could stand for if it continued to fall in the domino effect. Domestically, things actually look very good. The economic numbers have been stellar. We've had great corporate earnings. We've had good industrial production numbers. Remember, we've got the three things that are most important. We've got liquidity, we've got low interest rates, and we've got negative investor sentiment. That is very important. Negative investor sentiment means there's a lot of fuel left in the economy and in the markets to propel it higher. In fact, take a look at this chart. You can see this. Investor sentiment has actually declined again, meaning less people are bullish and more people are bearish. And that only goes up to last Wednesday before the market imploded on Thursday and Friday. You can only imagine what those numbers are going to be this week when those numbers are reflected after the scare from Thursday and Friday. In order for this market to go forward, validate what it's done in the last year, and to continue to propel itself, the three things it needs most going forward is good corporate earnings, new jobs created, and increased consumer spending. Corporate earnings have been stellar. Almost 75 or even 80% of companies have excelled and exceeded corporate estimates. In fact, 56% higher next quarter from last quarter. Last Friday we found out a lot of new jobs were created. This is fantastic. This is what I've been mentioning as one of the most important ingredients necessary. The third, and actually the most critical area, will be consumer spending. The consumer has to start spending. As I've said many, many times, I'm very skeptical about this for the long term because the aging demographics, the aging baby boomer, people spend less and save more as they get older. However, I want to keep an open mind and we'll see. If consumer spending comes in and jobs are created, then we're in for a brand new bull market, which is going to take the market a lot higher from here. If not, we could be just seeing another bear market rally, which we've seen in the past. We saw one from '03 to '07, which moved the market a lot higher. Coming back to Greece for 1 second. It's important to understand that Greece is not an isolated incident. Greece is actually a symptom of what we're going through. The over-indebtedness of developed nations. Greece is doing it, all of Europe is doing it, and guess what? We're doing it here. And eventually we're going to have to pay off our debts. And that's why eventually I think the market does go down and make new lows. Hopefully not until around the election, but it could happen. This turmoil we're having now, it could actually make a big impact in the short term. This could be a topping pattern, meaning the market could roll over in the next couple of months, or it could take several months or even a year. But I'd rather be safe than sorry. Prepare, invest wisely, and be cautious going forward. I hope you enjoyed my talk.
Do you have questions for Keith? Email him at keith@keithspringer.com.